My friends, hello again. Sam Neumann, Denver Realtor. You know the drill. Back with another market update. People have been seeming to find a lot of value in these, so I'm going to keep doing them and try to do them more consistently. We'll call this one the October market updates, a few days before October when I'm recording it. But going into October, here's what things are looking like in the Denver metro in terms of real estate. I have my friend Megan Aller here again. She puts out the best stats in the world, which is why we're going to use her report that she generates every week. I just found out recently she's the #1 title rep actually in America. So congrats, Megan. Not surprising. You're awesome. Just going to go through a few relevant slides to see what makes sense and where we are in terms of the Denver real estate market. First of all, this is one, don't worry about all the numbers. This one Megan puts together to show, I'm going to move me over here. It doesn't matter, to show what's going on. Basically, are we in a buyer's or seller's market? So on the left side, you can see it starts with over here. Yeah, I got to use these tools here. It starts, this is this year, starts with January, goes all the way down through September. So January at the top, September on the bottom. And red in these columns, more red basically means more of a seller's market. More blue means more of a buyer's market. Okay? So from January to September, you see what's happening in this whole thing. A lot of red going down to a lot of blue. Not every column's blue, but down here, it's getting much, much bluer, which goes along with what you guys know is happening, what I said last time, moving into not a buyer's market, but more of a buyer's market. We'll talk about that here in a little bit. So, done with that. Our first slide here, where do I move? I think over here is the best place. Still figuring it out. This is month supply. This is our inventory. This is what's going on. Basically, we're looking at month supply is this thick, I think dark blue line here. And average daily active count is the more neutral blue line here. Basically, you're just seeing what has happened since the peak of the market in these earlier January, February months in 2022. It was obviously much, much lower there. I mean, we were around 1,000 units in the entire Denver metro. That's gone way up. We're up around 6,000, over 6,000. And basically, you're seeing the last few months, it stayed about steady. So inventory generally drops this time a little bit. It stayed about steady. Not a whole lot of change happening there. So still, what we're seeing is a much greater supply of inventory from what we had earlier this spring. That hasn't changed a whole bunch in the last month. Same thing here with active units versus a balanced market. We have 6,700 active units right now. Don't worry about all this because there's so much data on here. But versus what a balanced market would be more like 28,000. So we're still only at 25-ish% of balance. Now, that doesn't mean that we're only at 25% of a typical market. This would be a balanced market, meaning there's 6 months of inventory. So it would take 6 months for everything to sell if nothing new came on. Well, but typical is much lower than that. So typical for this time of year, somewhere between 8 and 9,000 active units. So you see with the 6,700, what we have right now, we're getting closer to that. We're still not there. So we're still in a seller's market, and we're still in more of a seller's market than typical for this market. But we are getting closer to something that looks more like typical, which, if you've been trying to buy a house in the last couple of years, you'll know is a good thing. Interest rates are obviously affecting this to a degree. This is average showings per week. Showings per listing per week is 2. That hasn't changed really in the last month so much. It's been hovering right around 2 at all price points. And average showings, how many showings you need on a listing to go under contract, we're at 12.5. That hasn't changed a whole lot either. This next slide here, we have median days on market for all price points. What's interesting to me, this peaked out at 20 in August, and that's actually gone down to 17. So it hasn't gone down a whole much, and you could talk about margin for error there and all that kind of stuff. What's interesting to me is that it hasn't continued to climb. And so we're seeing maybe a little bit of a late late year push in terms of buyers getting back out there. But I also think we're seeing listing agents price their homes more properly. You should be pricing anywhere from 3 to 5% under what a similar home would have sold for at the height of the market right now. And I think that people are catching up to that, and that is having an effect on a fewer median days on market. You see price reductions. The Number of, basically the percentage of homes that went under contract that had a price reduction is at 44%. That's actually come down a little bit. Still very high, but it was at, I want to say 48% most recently, the last time we checked in. And again, I think it's the same thing, just people catching up with the market and pricing a little bit better. That's what's causing that slight drop in price reductions. So this I pulled from a different one. This is only for detached properties, but I wanted to show you this because people are going to say, well, what are prices doing? Are they going up? Are they going down? What are they doing? Well, this is what's happened on the year. So you've seen from May until now, we have about a 9% drop in Denver closed real estate prices. So, prices are going down. Well, even with that drop, we're still up about 8.5% year over year. So it's still up, even after this drop, of at least 8% of where prices were last year. So that's how we look at prices. Are they going up? Are they going down? We look at them a year over year level, because these little fluctuations can happen. We got to look at the big picture. And the big picture is we still have a year of appreciation because we have all those massive gains in the spring. There's so much ground we made up. We'd have to lose a lot of ground to lose all those. We're not going to lose that much. And a few percent drop from July through October is typical. And that's something we see generally every year. It's a little bit bigger this year because prices have fluctuated so much, but we've still gained a lot over year. And then if we go to, this is something I found interesting. If we go, she breaks it down by price point. And I'm not going to go through all those price points, but in the Denver market, up to $500,000, it's a bit of a different market, which is not surprising. If you can get something for under $500,000, that's going to be a little hotter market because it's more affordable. Not surprising. So you're seeing versus 1.6 months of inventory, we're seeing 1. So quite a bit less in terms of the inventory on the market. That's this thick blue line. And we're also seeing, basically, nope, that is what we're seeing. We're also seeing active versus balanced market. Basically, there's only 16% to create a balanced market, 16% of what's needed to create a balanced market versus that 25%. So again, inventory is much tighter, partially because there aren't that many Denver homes that qualify for this price point anymore, but it's a more competitive segment of the market. And if you look, we're getting 2.8 showings per week per listing rather than 2. Again, quite a bit more activity there. And median days on market are 15 rather than 17. So it's not a huge difference, but it is affecting it. That price point is affecting it because this is the most competitive price point, because this is the one most people can afford, and the fewest homes will fall into this category, if that makes sense. I'm not going to show you all the other ones because it basically falls in line with the overall numbers that we looked at the beginning. And then if you go up to the 2-3 million price point, that's when things are staying on the market much longer. Supply is a lot different. That's just a different market. And so we don't need to go into that necessarily because it doesn't give us a great overall view of what homes are doing in general. So same thing as last month. Basically, homes are sitting on the market longer. Supply is tightening up a little bit. Median days have gone down a little bit, but it's just a completely different world from what it was in the spring. And that's something that if you are selling your home, and I posted a video about this on Instagram the other day, if you're selling your home, the key is don't panic. And the key is have a plan. Develop a plan before you go on the market based on what the market is doing and stick to that plan. Don't panic and drop the price a week in just because you haven't got enough showings. Well, you haven't had time to get enough showings yet. This is not February. This is not March, that type of thing. And then if you're a buyer, same thing. There are deals to be had. Still 44% of the homes out there had a price reduction. So don't go in and thinking you need to go over asking or even at asking price. Look at how many days it's been on market. Again, come up with a plan and stick to that plan, and you can find something you're happy with. Interest rates do keep rising. At the time of this recording, that's something that's squeezing affordability for everything. So home prices are having to react. That's why we've seen that 9-ish% drop from May until now, because home prices are having to react to higher interest rates, which is causing harder affordability. So home prices are having to come down a little bit so people can now afford them. People can afford that monthly payment because that's what people tend to look at. when buying a home, what is my monthly payment going to be, less than what is this abstract number that this home theoretically costs that I'm going to be paying back over 30 years. I probably won't still be paying that same loan 30 years from now. If I do end up paying that same loan for 30 years, I'm going to pay much more than that theoretical price because of all the interest, whatever. The important thing for most people is that monthly payment. So if you're in the market to buy, it's great, especially if you got approved 6 months ago. You need to have your lender rerun those numbers and figure out what your new monthly payment will be, and that'll give you a snapshot of affordability with interest rates right now. So that's it. As always, guys, I'd love to be your go-to Denver real estate resource. My information is below. It's in the comments. It's wherever you know how to get a hold of me. Let me know if I can be of service. Otherwise, thank you for watching. I love you all.